Hi, everyone. Welcome to Capital Insider. I'm your host, Ellie Perlman. I'm the founder and CEO of Blue Lake Capital. And today I'm going to talk to you about the semiconductor industry, which I'm extremely passionate about. What if I told you that the US government is spending more money on one industry than it's spent on the entire interstate highway system? And nobody in real estate is really paying attention to it, which I find very interesting. Where all these workers are going to live, right? They're going to live exactly where we're going to buy assets and give them housing solutions. That's the semiconductor industry, and it's a huge thing that is happening right now. This is the next wave for demand. This is what's going to bring a lot of people to very specific US markets. You want to make sure you're going to be there. So let's get started. I mentioned the interest highway system. Back then in 1991, the US government spent about 129 billion to build that. So if you adjust it to inflation, we're talking about 300 billion in today's dollars. Now, semiconductor industry that started several years ago under the Biden administration, that was essentially the CHIPS Act, which allocated $53 billion in government funding to all those factories that create the chips that fuel AI. AI needs those chips today. And so there's a major push from the US government. It started during the Biden administration. It's going to and it definitely continues under Trump's administration to reshore jobs, to keep jobs in the US and not import those chips from, outside the US. And so all those reshoring commitments, whether it's public, so the $53 billion of government funding to those factories, and all the investments from private companies, that's close to $280 billion, right now. So the CHIPS and Science Act essentially allocated 39 billion for semiconductor manufacturing incentives. And if we were looking at 2025, at the beginning of the year, the Commerce Department essentially awarded close to 31 billion in direct funding. It also gave $5.5 billion loans to about 20 companies to create those fab projects. And so, really, the way that I'm looking at it is that the federal money is the seed. And you see a lot of companies, TSMC in Phoenix, they've committed to invest over 160 billion over the next 5-6 years. TI is opening 4 fabs, factories in Sherman, Texas, which is kind of northeast of Plano, Texas. And all those are already in productions. And so Intel has also another, they have 2 fabs that's about 30 billion, 28 billion or so in Columbus, Ohio. You have Samsung, you have Micron. So you have all those big companies that are investing hundreds of billions of dollars into those factories. Now, that might not be the most glamorous kind of type of industry, but we're talking about almost 280 billion in investments that are going to the semiconductor industry. Every factory employees can employ 6, 10, 15,000 people. There's usually not enough people from within that market, not enough working hands. So those companies are importing people from out of state. The estimates out there are that there's going to be over 115,000 new jobs, new semiconductor jobs created by the year 2030. That's a huge amount of direct jobs. That's one kind of tremendous impact, direct impact. Now, for every direct job of hiring into those semiconductor factories, you will have 3 to 5 indirect jobs. So think about all the suppliers, all the equipment, packaging, testing, all these kind of related industries that are going to thrive around those semiconductor hubs. retail, food services, you name it. You're going to have some really interesting pockets of an increased demand for housing because you have a tremendous amount of families and individuals that are going to move into those corridors. So, in total, we're looking at 400 to 500,000 total jobs in new jobs in those corridors. That's a huge amount. And we're not talking about a trend. We're talking about major well-funded companies that are receiving government funding. And this government funding is, by the way, it started in one administration, it continues in a different administration. So it's really not been impacted by any political, landscape. So that risk is being lowered. And those employees, they're making between 60,000 to 110,000 dollars a year. Not enough to buy a house in the markets where they are. We're talking about Arizona, we're talking about Columbus, Ohio, we're talking about, Sherman, Texas. And so these employees will need a place to stay. Now, we're not talking about factories that are going to pop out throughout the US in random locations. That's the markets, that I've mentioned earlier. You have really 6 to 8 main corridors, and this is where Bullock is going to be focused on. And that's what creates the pressure for housing but also the opportunities because you're going to have hubs of semiconductor factories kind of manufacturing, and you will have a tremendous need to provide housing for where AI is being built. So we're not a technology company, and we don't manufacture chips, we don't manufacture software, but we're as a real estate company, we can provide housing to all these employers that are building the next wave of AI in the US, and that's huge. This is one of the things that we're focused on at Blue Lake. If we double click on, Arizona, for instance, Arizona and specifically the Phoenix market has been very hot. We know in the news there's a lot of supply, a lot of assets, and a lot of institutional money that went to that market. Now, based on all the reports that are out there, we're going to put all the kind of research and data that is backing everything that I'm saying here on the podcast today, so you can research it and see it, by yourself. But Arizona, based on research that came out, a report that came out from the Arizona Board of Regents just a couple of weeks ago, essentially estimated that Arizona is going to be short about 10,000 workers every year. So it's essentially, if we're looking at the next 3 years, you're talking about 30,000, 40,000 employees that are going to be short. So like I said earlier, that means that Arizona, it doesn't have enough local workers. They'll need to bring people from out of state. And even if they're local to Arizona, those factories are not being built in major kind of core urban hubs. There's just simply not enough room. So it's a bit further away in secondary and tertiary markets. So for instance, in Phoenix, Arizona, where we own real estate there, the semiconductor corridors are in the Mesa Gilbert area, which is a bit outside of the city. And every investment, like, and I shared the numbers earlier, we're talking about tens of billions of dollars to build those factories. So they're here to stay. This is what's going to fuel the demand, in my opinion, for the next wave of working hands and tenants. We also see in-migration from expensive cities and some for all kinds of reasons. A lot of it is because of the cost of living. So we know that a lot of people are leaving California, which I personally love. And I know we have our own problems, but going to Arizona, to Texas, to Florida, because it offers them quality of life that they can find in California because of cost of living, but also because this is where companies are moving into. I mean, Elon moved the operations to Texas. He took with him a tremendous amount of employees. And so you have all those reasons why those markets are growing. And the focus is on, the semiconductor as a strategy for us because this is where we see the demand. These hubs are not extremely popular many times. There's not a lot of new construction, which is great in those corridors. And they are drawing a tremendous amount of new employees that will need to live somewhere. And this is where we want to be. This is the next wave. This is the next stage of kind of concentrated areas that would need apartments. And there's not going to be enough apartments. There's just simply not enough for all these working hands. It's exactly where you want to be. And we also know, and if you've been listening to my podcast, you know, because I talk about it ad nauseum, that new construction is down. So you're really not going to see a tremendous amount of new construction and new apartment buildings that are going to come online that would essentially compete with the assets that we're buying because of many reasons. High, so loans are less attractive, and you have kind of an increase in expenses, materials, and labor costs. So all these things have essentially impacted and lowered the desirability of those new buildings. So a lot of developers are essentially shying away from building new apartment complexes at this point, which is great for those who are buying existing assets like us. So I talked a little bit about, the Phoenix market where TSMC is there, and mentioned earlier that TI are building it's a $40 billion facility in Sherman, Texas. Samsung is doing the same in Taylor. That's in the DFW area, and Nvidia is also committing to building AI manufacturing facilities in DFW. If you're looking at Sherman, for instance, that's a town of 44,000 people. And when you're bringing a huge project, $40 billion project, that's huge for this town. In real estate, you want to be where the party is before everyone knows about the party. This is what it is now. So there's already factories there producing chips, and there are more factories that are coming. That's a small town. There's going to be a lot of new working hands walking around. So valuation of real estate is going to go up. And they will need more apartment buildings, but nothing much is coming in the pipeline in the next 3 to 5 years. That's what I want to see as a real estate investor and as an owner. There's essentially some additional construction that I actually like that is happening there. So there's a company that is building a mixed use, project across the highway from TI's campus. Some of it is multifamily, some townhomes, commercial, etc. But that's the only actually project that I've seen in a pipeline, and it's going to take a few years, and it's just one project. With the amount of jobs that are coming there, there should have been a lot more new construction. And as you can see, there's not much, which is great. And so that's just one of those markets that I'm also really excited about. I also talked earlier about Columbus, Ohio. You have Intel's, $28 billion investment over two factories, two fabs on kind of massive campus. That would open close to 2030, so there's still a little bit of time, but there's a few $1 billion that Ohio received from the CHIPS Act. So there's billions of dollars that are going to fund this, and we need working hands. Working hands need a place to go by the end of the shift, the end of the day, and live somewhere and rest. So these are, I would say, the main markets. You have a few more markets. There's Austin, Texas. Samsung has essentially building a $17 billion fab. It's just a massive workforce, impact that is coming from this industry. So when I'm looking at the map, I see something that I don't really see in real estate, which is it's a government-funded, company-backed industry. And geographically, it's kind of concentrated around 6 to 8 different markets. We're talking about a 10 to 20 year runway. This is not something that will turn around very quickly. and we know exactly where they're going. We know when employees are going to come because we have an estimate of when those factories are going to be open, and we know how much money they're going to earn. You have a very high level of predictability, and it's not a speculation. It's essentially something we can underwrite. That's very, very unique to real estate, where many times you're not sure where the next demand wave is, the wave of demand is going to be. If the tech industry is going to rise, if new companies are going to open, you see that because you know who's getting the money, who's building, when they start, when they finish, how many employees they're going to employ, and how much they're going to make. All of it is out there. It's already published. So I find it very interesting that it's something that can be, it's predictability that we usually don't have, in real estate. So, I think that it's extremely interesting. Again, you have a combination of major companies with major government backing. It's part of the policy that the US government is pushing forward, and there's not much new construction coming, online. And so for employees that make, 60 to 80, 90,000 a year, those people they can pay the rent. They can pay it on time. They don't want or cannot buy a house, and their default is to rent an apartment. And we want to be in those corridors where the boom is coming. The shift and the increase in demand is going to be there. And you want to be there one step before. It's a well-established town with, tens of thousands of new employees, and that's exactly, where we want to be. I think this is the biggest demand catalyst in multifamily since, the Sunbelt migration. But the difference is that this time we know exactly which cities, exactly which employers, how much they're going to spend and how much they're going to pay the tenants, or our future tenants, how much you're going to pay their employees. So all of it is coming with a government backing, which is beautiful. So wanted to share with you kind of what we're working on at Blue Lake. We're launching a fund that is focused on the semiconductor investment. So if you want to talk with us about that, want to explore it, reach out to us at info@bluelake-capital.com. But I really think that this is a very unique landscaping, very unique opportunity that we just don't see every day. That's it for today, guys. Thank you for listening, and I'll see you on the next episode.